So, I think today's going to be a little bit more of a discussion heavy / casual day. And we're going to chat about funding public goods and wealth inequality. That's what's happening for most of today. But before we do that, I want to talk. So yeah, that's funding public goods, wealth inequality, and a little bit about like self-taxing and abundance stuff, which is very connected. But before we do that, talking about project updates and things like that. So I want to first say thank you to the folks who sent me papers. I think I've given back almost everybody's. Art, I need to do yours. But thank you for sending me the papers. And then also thank you to the folks who have sent me feedback in the form. This is one where I don't know who has or who has not done it. But if you haven't, I'll send one more reminder email to say, hey, please send me feedback, because it really will update the rest of the semester. For example, we are likely to focus a little bit more time on discussion and a little bit more time on projects and a little bit less time on lecture. That's been one theme of the feedback thus far. So that's that. And on the project side, a reminder for folks that when you're doing your projects, there are these weekly update things, and so you send those to us either through the classic Google form or just to the or to me or to the blockchain instructor's email, and you say, hey, here's the update. It's mainly a function of accountability for you to be like, hey, am I doing cool things? Is this project that I'm interested by, what am I doing in order to achieve my goals? And then part of it also is asks. So that's when you're asking me questions, either hey, what do you think about this? What is your advice here or whatever? Or it's asks about hey, can you introduce me to someone or something?
Oh, that's what they ask, man. I thought that was just general asks for the week ahead, not just directly at you.
Asks are a very specific term that business folks use, where they say, hey, especially startup folks, where it's if someone is emailing me back and forth, they're like, hey, how's it going, Reese? What you doing? I'm like, what's your ask? What do you want from me? It's kind of funny.
You can ignore the ask.
Yeah. It's very helpful.
Busy.
Right? No, I mean the people that are trying to waste your time.
Oh, right.
Nice.
Just ignore my asks for this week then.
Okay.
Just general asks for myself.
Nice. I can't help you with
What's
it.
the meaning of life?
Yeah, exactly. Open questions. That's what asks are. And then presentations are happening in 2 weeks. And so folks will have, so it's October 31st, essentially the same class day, and we'll spend most of class with people to give a presentation, 5 to 10 minutes. We'll see exactly how much time. I'm currently confirming with folks who will be presenting and who will not be presenting. But probably 5 to 10 minutes with some additional Q&A. And it's very similar to your project proposal, where you just say, hey, here's an overview of my problem, what I'm working on, how my project addresses this, what I've done thus far to tackle it, and then what my goals are for the rest of the semester. That kind of a thing. Though if you want to do, I know Natalia and I, we chat about doing a specific design thinking workshop or whatever. So there are options for what you want to do, but this is the big macro piece here. So you have 5 to 10 minutes and spend it however you want to in class, and this is a easy initial way to do that. So are there any, before we do one more thing on projects, are there any questions on either the weekly updates or the presentations in 2 weeks? Cool. So, I think it would be good now for us to do a little bit of discussion. So, what I want to do is, in groups of probably 3, for just to get together with the folks around you in groups of 3, and to share your project with them and say, hey, here's what I'm doing, here's what I'm excited by. And these same questions. Hey, here's what I'm thinking about. Here's some of the problems I see in the ecosystem. Here's what I'm trying to do to address it. Here's what the progress I've made thus far. Here's my goals later. Here's some challenges that I'm doing. And then for the other folks to sit there and say, oh, that's really interesting. Tell me more about this. Tell me more about that. You are required to say that what they're doing is cool. And ask, but push and ask them to clarify things. Ask them about their challenges, help them focus things, or maybe if they're being too focused, help them widen their focus. stuff like that. So we'll take maybe, I think it'll be maybe something like 5-ish minutes per. So I think we'll do in the groups of 3 to kind of go from person to person. And we'll take probably 10-ish minutes total with about 3 to 5 minutes per person. Does that sound good? Cool. So get with the people who are near you. There are 9 of you, so you can find a nice one. Find the people who are around you. Bring it back together, folks. Let's bring it back. Cool. So, thank you all for sharing with each other and hopefully having some productive discussions about what you're doing and what you're passionate about. Does anybody, there's no need to say anything, but does anybody want to say anything? Have any questions?
I really enjoyed this. I thought that was really cool.
Me too.
Yeah, this was really fun.
Good, I'm glad. I think I think people are doing a lot of different things. We have people who are there might be some code, there might be some art, there might be some written things. There's some workshops. There's a wide variety of things that are happening. So it is cool to see all the different projects that are occurring. And I am excited. And really, definitely, please reach out to me and continue to reach out to me if you would like help on your project. So let's chat about today's topic now, which is funding public goods and income inequality. I want to start with just some kind of discussion around funding public goods. And the first question is, so with open source software, which is what almost all these protocols are, they are on GitHub, you can go and you can look at the software. Why, and these are open questions to everybody right here just to get some discussion, why should we think of open source software as a public good?
Because I think everyone's using data, and so to have a common pool and a common structure for how that data is organized and then accessible to different types of industries and also governments, especially if government wants to be a part of the next generation of innovations. I think it's important to make it more like a commodity and something that's more accessible to everyone, or maybe people pay for it as they access it, but it is open to everyone, so that we can all build off of a common structure and source.
And are you talking about the structure that should be, the standards that should be common, or the data? Which of those are you talking about?
I would like to say both, but I don't know if I know the technicals enough to say which would be the right way to do it. When I think about structured data, I feel that would be nice because otherwise people are pulling and interpreting data in different ways. Unstructured data is just so hard to work with, especially even within companies. If you have a shop in China, you have a shop in the US, just the way your workers are pulling and interpreting data is completely different. And so to have some structure there could be good. I think governance would be different, because between data sets you might want to have more governance for others versus for some data sets versus others, based on privacy concerns and regulation, versus something that is more high level, more metadata, might have way less governance.
Mm-hmm. So I'm hearing kind of 3 different things there, or I hear both, and then we'll go to Lucas. That I agree that something like a standard could be thought of, and we'll give a formal definition of a public good in a second, but standards, I think, for all intents and purposes, are public goods. Some of the underlying infrastructure, stuff like open source software, can be thought of as a public good that many people can use. And then that governance piece, I didn't fully get, but I think what you were saying there was that it might not be a public good and that different people use it in different ways. What were you going to say, Lucas?
I guess in economics classes, I've always thought that a public good is non-rivalrous and non-excludable.
Yeah. That is tell us more. What is this? What does that mean?
It means that I can't stop you from getting it if I wanted to, and that my ability to consume it does not affect your ability to consume it.
And which one of those was which?
So non-rivalrous means that if I consume open source software, there is not less open source software for you to consume, and that if I wanted to, I couldn't stop you from consuming that. Is the non-excludable good.
Yeah, so that is, and I think that all of what you're saying, Natalia, is something like a standard is a great example of a public good, because if there's a standard, just because it exists and I start to use it doesn't mean that you all can't use it. And it's very difficult for me to exclude other people from using that thing. And so, yeah, when people think about public good is kind of a weird definition, because people often talk about like, oh, we're doing things for the public good or whatever, and that's just kind of a general term to mean like, oh, we're doing things for society or something like that. And so it is important to kind of differentiate between like, hey, we're doing things for the good of humanity versus like legitimate, like in an economic sense, public goods. And so as Lucas was saying, there's the non-rivalrous piece, which means if I consume it, then you can also consume it. So something like, air, it's like my consumption of the air, or something like national defense, my consumption of that thing doesn't stop you from consuming it. Like the tanks protect everybody. And then the excludable versus non-excludable thing is saying, okay, can I exclude you from doing it? And again, with something like public defense, it's like, it's pretty hard to like, if you're creating a national defense thing, to be like, oh, let's like defend everybody, but like not those people, not like Massachusetts or whatever. And so you can kind of the world gets broken into these categories where you can see stuff. A lot of capitalism is really, really good at doing private goods, which is something that is rivalrous and excludable, where you say, okay, I have this piece of food, and if I eat it, you cannot eat it, and I can stop you from eating it. And so capitalism is really, really good at like funding and like doing optimizing for private goods, but it's not very good at public goods. We see one other piece here, which is a club good, is this kind of interesting one where there we go.
I mean, we have lots of standards in this country, and this country is a capitalist country, you would say, right?
I agree.
So why is capitalism not very good at standards or public goods?
Yeah, good question. So I would say that in general, a capitalism as a economic mechanism, it is not very good. Capitalism is not, for something like rivalrous versus non-rivalrous. Do you want to respond to that?
I would say that capitalism is very good and very efficient at responding to price signals, and when you have a public good that you don't really know how to price, it's difficult to then know how to manage that good. But I don't know if that's limited to a capitalist country. I feel like any country is probably bad at responding to how to manage public goods because there is no price signal, and it's very hard to sort of.
But in a capitalist system, there might be a lot of pressure to have good price signals, and standards help you have good price signals.
Yeah, that's true.
I think that's an argument for why let's call it a capitalist country, or a country that is really into price signaling would want to be optimal. And you can make a similar argument for national defense, which is that, hey, capitalism really wants property rights, wants strong property rights, wants things like that, and therefore it is good at providing public goods like national defense, or something like air. You could make that argument too, where like capitalism does want everybody to be functioning well, and therefore and again, air, that's where it gets tricky because stuff like climate change. But I think that Lucas's point generally is correct, which is that price signaling around public goods is very difficult when you have a non-rivalrous good, a non-excludable, non-rivalrous good. When you try to price a non-excludable, non-rivalrous good, it is difficult.
And just to make sure that I understood correctly, when you say free-to-air television, I'm not sure if, I want to take this example in cellular networks. There's frequencies that you have to license, so you technically can exclude people from using different frequencies, right?
So I think that the idea behind free air television is kind of like some funny old word that I actually have never heard before, taken from Wikipedia. I think it's talking about things like that, like radio frequencies. But how is it possible if I have some radio frequencies and I'm blasting those out to the world, or some television frequencies or whatever, how would I exclude someone from consuming that frequency?
You cannot exclude them, but as a government, you can start finding them. For example, if you're one cellular network, AT&T and let's say Verizon, you're allowed to use these bands, but not those bands. And Verizon is allowed to use these bands. So if someone kind of overlaps, and Verizon can kind of complain or
Got
sue
it.
them.
I think he's talking about the consumption of free-to-air television, not the producing on it.
You
I'm
can
talking about excludable part, that the government can exclude AT&T from using Verizon.
I know, I think you're talking about something different than like
Okay.
what you put in the box there.
I think that this distinction though is the correct one, which is that when we talk about excluding a thing, we're not talking about, we're talking about from a consumption perspective. Can I consume, if I'm consuming my frequencies over here, it's very hard for me to stop you from consuming your frequencies over there. However, if I'm consuming my peanuts over here, it is very easy for you to stop consuming those peanuts because
Well,
that,
in the UK, you need a television license to receive broadcast TV, and they fine you significantly. It's quite expensive if you don't have a license. And they used to go around with these devices that would detect. I guess a television receiver in the old days also broadcast a certain amount of just RF noise, and they would drive around these vans and figure out that this house has a TV and they're not paying the license.
that is
So-
awesome. That's a really interesting
It's
example.
still a thing. I mean,
Yeah.
there was a huge controversy because they were dropping or raising the age of, you don't have to pay your license when you turn 65, and they wanted to raise it to 68, and the whole country erupted into flames.
That's what you were
So I guess in that case, the excludable good would be the TV license and not the frequencies.
Mhm.
There are places where there have been schemes where they encrypt broadcast TV, and then you have to buy a special decrypting device, and they would go after people who pirated them and stuff like that. So,
And I think that all this is, to some extent, gets at this idea of public goods versus club goods. And a club good is something that I used to not understand, but now understand, which is that it kind of gets at what both of you are getting at, which is if you want to take a good that was previously non-excludable and you kind of make it excludable, you say, hey, we used to have, I think something like a TV is an example of this, where it's like, in theory, you should be able to place a big projector somewhere and show the TV to people, show the movie, and my consumption of it doesn't stop your consumption of it. We can all look at the atoms coming towards us, the wavelengths of light. But what they do is they turn it into a club good, they make it excludable, and they say, no, you have to be part of the club, aka buy a ticket. You can then get into the movie theater. We will put walls on the outside so that you are excluded, and then only then can you consume this good. So that's what a club good is, and that's exactly what you guys are talking about with whether you're encrypting something or whether you're making these TV licenses, is you're taking something that's naturally non-rivalrous, which is this kind of, I would call a bits-based or a wavelength-based good, and you're taking that thing, you're saying, let's put walls around it and let's make this thing a club good so that only certain people can use it, only people in the club. And we say one final piece on that, which is interesting, which is you can think of the Ethereum network and something like gas on the Ethereum network as a club good. What they've done is they've said, okay, we have, or you can think about Bitcoin transactions, the block space as a club good as well. Where you say, okay, here's this thing that in theory you could think of it as kind of with something like the block size cap. You can think of this thing as a non-rivalrous thing. My use of the Bitcoin blockchain should not necessarily mean that you can't also use it. And what they've done is they've said, okay, but we are going to turn this thing into a club good. We're going to make it so that it's excludable, so there's only a certain amount of gas or Bitcoin block size for you to pack your stuff into. So you need to be part of the club, aka pay ETH or Bitcoin, in order to get into the club of who gets broadcast in the next block. So this is a helpful diagram for thinking about things. And in general, a lot of our issues with society are these public goods that we do not correctly allocate for. The other piece here is coming back though to this question originally of funding open source software, and this gets to what Natalia was saying earlier, which is that open source software, we can think of it as a public good because it falls into this bucket, because it is something that is non-excludable. If I have this open source software out there, like the Ethereum network or the Bitcoin network, it is difficult to exclude people from forking that software, from running it on their computers, etc., etc. And it's non-rivalrous in the sense that my consumption, my use of, let's call it just general open source software, like something like my consumption of Linux, like using Linux on my computer, doesn't stop you from using Linux. So that's why we think of open source software as a public good. Does that make sense? Any questions on that? Or-
I think it's actually more important to think of it historically than these categories, the economist categories. Linux and open source software has grown up with a very strong ideology and very much against a particular enemy, originally Microsoft, right? And what they care about is that it's a shared endeavor where nobody is reaping the benefits alone. That's the key, and not really whether it fits into any particular economist categories, to my mind. So we should think of it as maybe not the public good, but we should think of it as something that has an ideology that a lot of people buy into, and that's the essence of it, to me.
I disagree. I think it perfectly fits into this bucket, especially because like when open source software is made better, it's made better for everyone. And now a lot of open source software projects are funded by private companies. Like you might wonder, like how can we convince people to make the air better? Like because we need to convince them that there's this economic benefit to making everyone healthier. It's harder to like make that argument. But a lot of these private companies, say like Google or Facebook, have produced a lot of open source software, and it's in their benefit for this open source software to be good and for other people to use it and make it better, and it looks good for them to be putting this open source software out there and to be getting bug reports more directly rather than people writing exploits. And that's like a different model than what you're speaking to, because it's being funded by these private companies that are benefiting from it as well, and it's benefiting everyone.
I don't disagree with anything that you say.
I don't know if licenses come into a discussion here as well, because even in open source there's licenses that you have to give a reference to that you're using this module or stuff like that. I mean, that way you can technically sue someone if they're using your software without giving a reference. Does that make sense?
I don't know if you're
Actually, the license is to try to keep it to still be like to make sure it's a public the license.
Yeah, for example, let's say I don't have a good example, but if I use an open source module and
Without
don't,
referencing it.
yeah, without referencing it,
The act is actually against the public good, and
Yes.
because that's why they need the license to keep it as a public good.
Yeah, like usually the licenses are about like you using the software and then you making your software private. But that's what some of the licenses are about.
right. Okay.
I would say, what you're saying is that historically, open source has morphed. It's become actually much more complex now than it was at the beginning. And so whereas maybe open source at the very beginning would have fit into these categories, now it's getting like, whoa.
Why? Why isn't it still a public good?
Well, there's still a profit motive involved, and there are all kinds of meshes between private and public that's going on in open source software nowadays. And now it doesn't fit nicely into categories.
I think services that people that sustain, that keep up, maintain open source projects is different than having access to the open source project itself.
Yeah, absolutely. Yeah.
So like the
I
services
agree.
that they provide and they interact with private companies to optimize the open source project with whatever private company's project is different than average Joe getting access to that open source and trying to do whatever they want with it.
Yeah. Now we're getting into the confusion again about the consumption of it, and right, because what we're talking about is as a coder you will have access to the code, right?
Mm-hmm.
But you can actually license it, and not everyone will have access to the consumption of the code.
No,
But then that's not open source.
Anyone has access to the consumption.
That's not open
That's
source.
one type of license.
Well, but there's
There's
in
different types of
any
licenses.
kind of code,
Mhm.
pretty much nowadays, there's a lot of open source inside it, right?
Mm-hmm.
Right, we're talking about the code that is open source, that
Almost all code nowadays is a mix of open source and proprietary code, right? It's a total mess.
Right, but we're talking about
Right.
the code that's just open source.
Yeah,
where,
that's
like,
not
you can see the
mixed,
entire
like-
project, and in that way, it is open for anyone to
Well,
consume.
maybe you're
and use.
talking about that, but
Well,
you know.
Cause
Okay,
if
I
there's
would-
like
but there's,
licenses
like-
limitations, I wouldn't say that that's open source. I mean, I guess it could be, you could be part of it, but I don't know.
It sounds like to me that I think that Aaron's initial point is that in addition to, or one could either think of something like a public good from a economics perspective and use these buckets and say, oh, this good is non-excludable, non-rivalrous, therefore it is public good. Or one could look from a historical perspective and say, hey, what was the history from an institutional economics perspective, essentially, and say, hey, these new internet platforms were coming up into play, and then you had this competing ideology of Linux and these other open source systems that were like, hey, actually,
a lot.
yeah, join
right?
us.
It's really important.
Yeah, please join commons-based
Yeah.
peer production instead of like joining the man. And so I think that it is the case that these new systems were enabled by, to some extent, the nature of bits and the nature that these open source projects were public goods, that you could actually, everybody could contribute to it in this way. But they were excited by the story, and then the thing that they created was a public good. So I think those are kind of the two perspectives, which are the pure economics perspective versus the historical institutional co-evolution perspective. I think that's different than with everything that you all were saying about the licensing, which is, I think lots of licenses keep things public goods, but some licenses actively don't keep things public goods. Say, hey, we use this thing, and this is only this is a required. I'm trying to think of what the most licenses like MIT and whatever are ones that are like that, but there are some that are
Actually,
restrictive
The
licenses.
GitHub, by default, if you don't put any license,
Yeah.
it's meaning that no, anyone else cannot use it.
Anyone else cannot use it. Okay, yeah, exactly. So it's a taking a thing. Yeah. So.
So then it's not a public good.
Depending on the license you use, it falls under different categories.
What are you gonna say, Sabine? Yeah.
So are you saying that if there are those two ways of looking at it, the economics and the historic
Yeah.
way of looking at it, is then the example that Alex gave of Facebook putting out open source is then not a public good because it's not historically, like, there's another incentive there for them to put it out then?
I think what I would say, go. Yeah.
I would say that it's a public good. I mean, I think that there's profit involved in a lot of the public goods that we see as examples. For example, if a missile company is making better missiles and that's enhancing our national defense, there's profit in the missile company making better missiles, but we're still getting the greater public good of better national defense. So I feel like when we're looking at public goods, like thinking about the way Lucas put it, like it's really about consumption and like
Is national defense
it's like
also a
wonderful
public
loss.
good for the whole humanity or just for the country?
yeah, I guess it gets fuzzier there.
That gets into
Let's-
internalities and externalities. That's that's how you're.
I was just gonna say, just on defense, just because I'm taking a class on it right now, there's also like the argument of like, is what defense is working on good or bad, right? Depending on like who has control of the product.
Yeah.
So like there's whole other like little ethical questions that come along with that.
Not to go on too many tangents, but also I think there's a question of scale. Like national defense is free for everyone. With 300 million people in the U.S., if all of a sudden the population overnight doubled for some reason, it wouldn't. Like we still can't have national defense for everyone. I mean, if you take that idea to sort of ridiculous heights, I mean everything at one point or another is limited, and so it is not rivalrous at some point in time or space. Like if everyone tried to download Linux at the same time, you would crash the server and then no one can download Linux. I mean, this is semantics at this point, but
Yeah, there's no absolute.
Same with air.
For sure, but like if everyone drove over a bridge, it would crack.
Yeah.
Like you have to like limit like
Yeah.
just.
practically speaking, it's
Yeah.
not good. But
Yeah, so this is I think that we should start to move on, but the key idea here is when thinking about these things, you can think of them from a economics perspective here, like what is the definition of a public good. You can also think of them from an institutional perspective, and of course there are these weird overlaps between companies and how they interact with public goods more generally, plus all the externalities that we were just chatting about. And so with open source software, it is generally the case though, and if you guys read that roads and bridges piece which is saying like, hey, something like, you know, like if you look at whether it's like Instagram or if you look at something like OpenSSL, it's like we have all this underlying core digital infrastructure that's kind of invisible, but it is still this essentially an underfunded public good, where it's like OpenSSL is the best example of this. It was this library that lots of the internet was using. It was like somebody working on it like half time, and then there was a bug in it. And that was the thing, though, that made sure that all of like the HTTPS stuff on the internet like worked correctly. And it was like, oh no, there's a bug in this thing, and it was a big deal. And the reason, and what was the actual big deal, was that the underlying root cause was you only had half a person working on this thing that was keeping almost all of the internet's HTTPS safe. So it's like that is the macro idea here. That I would say combined with the idea that someone like Instagram, when they make their awesome app and when they have their 13 people build it in 18 months, sell for $1 billion to Facebook with 40 million active users at that time, who makes all the money? None of the stack, none of the open source software stack, none of those people make money. Almost everybody on Instagram makes all the money through their equity and things like that. And eventually there's this loop between the companies and the open source stack where they give money back to these open source softwares that they are built on, but the open source software doesn't have like a native business model.
But there was this beautiful paper at the conference the previous weekend of someone from the DCI. What was his name? Tash, yeah. So he was talking about this also from a very personal perspective, and how somewhere he's also really unhappy about working for free, right? It was, he was torn, and I wonder if a lot of people who are working in this environment are also torn. They feel, yeah, I'm contributing to something that is a public good, but yeah, I'm also getting screwed because I'm contributing to a public good, right?
Definitely.
And I think you see that addressed in like with Zcash and like their dev fund. And so like the first article was like really interesting, and kind of how like we've been doing this not for free, and we will not continue, and we will not do this for free. So if you want us to continue working on this, continue paying the dev fund tax. I thought that was like really interesting, because it just got to that point, like there's like we just like value our time, and we're just not going to do it for free. We've done everything we can, and we'll like transition to whatever the community wants us to transition to, but like it won't be for free.
We're not just gonna. There's no such thing as a free lunch yet. You're not just gonna give it to the people. So that's how Zcash does their founders. Or they do. Dina, could you explain how their system works? How they fund public goods?
Yeah, so I think it's like 4%, and they bumped it up to 8% of all new coins get sent to a dev fund that then funds that goods directly, I think, just to the electric coin company, and they are the ones that like maintain like the code and look for like any new bugs that might open up and stuff like that. So it's like
Same for Siacoin.
They have a developer fund. Yeah. So this is one of the main ways that blockchain projects can fund some of this open source code. They say, hey, we're making this new protocol. What we're going to do is, as the blocks get mined, instead of giving all that money to the miners, we're going to give a percentage of it to the crew, aka the founding team, and we will try to do our best to make sure that the software is maintained in a great way. So that's the idea there.
I have one more example in a permissioned world. The gatekeeper, the person who allows people in or out, kind of then license it. Although that, I don't know if you want to consider that open source, because that's still open source within that network. But yeah.
You're talking about someone who, are you talking about
Who
a
manages
blockchain?
Like Hyperledger
permission blockchain.
fabric that is getting
Yes.
used, for example, by IBM
For example, yeah.
and Mask.
Yeah.
Is a big example of that. Yeah.
And they have this open source software, and then they're licensing, what are they licensing?
To be a part of the network or not, because it's a permissioned network.
Yeah.
Okay, got it. Interesting.
So it's a club.
Interesting. Yeah,
It's a
yeah,
club.
it's a club. Okay, interesting. So yeah, that's a. I want to look more into that actually. The idea there is that you have these permission validator sets here, and you say, hey, if you want to be part of the permission, this is essentially Libra as well. Where you say, hey, do you want to be part of the permission validator set? If so, pays $10 million and you can be part of it. So how does someone like Bitcoin fund their public goods? How do they fund open source Bitcoin development?
That's the mining, right? You're paid for the mining.
Well, a lot of like the original people that like were able to like make money or and have built companies just like fund projects, right? Like Consensus funds a lot of projects, all these things. Like
It's more the community around
Yeah.
that.
Or the DCI.
yeah, exactly.
Nice. Yeah. I mean, yeah. So this one's weird. I think to some extent, Arn, what you're saying is interesting, which is that there's a if we think about a public good in these networks, you could argue that something like mining, and like I don't know how you should think about mining with respect to public goods, but I don't. So something like Bitcoin, it is there's. I wouldn't think of it like that because you're incentivizing the Bitcoin miners to mine blocks in the network. I think that's different than how Bitcoin actually funds its open source software, how they fund people to work on the protocol.
Sorry, absolutely.
Which is
Yeah.
much more similar to what you all are talking about, which is weird. Bitcoin was special because Bitcoin just said, hey, white paper on the internet, we're coding this thing up, and there was no founder's reward, there was nothing like that.
There was
And
an
so-
early adopter reward for sure.
and that's essentially what it turned into. So you have this early adopter reward, and whether it was just like lucky people who got in early, or smart people, or you can argue one way or the other way, or rich people, some combination of smart, lucky, and rich bought some Bitcoins initially, and now have a lot more in US dollars terms. And what they do is they just fund stuff in the ecosystem. So these are DCI is funded by some of these folks, people that have, like BitMEX is a good example. BitMEX funds us, and they have a lot of money, and what do? Well, they make Bitcoin software, and what do they want? They don't want that Bitcoin software to die, so what do? They give us some of their money. There's other folks in the ecosystem that are like this as well, like Chaincode and Square Crypto and Blockstream, all of which essentially are the same model, which is like to some extent like a billionaire funding model. What about Ethereum? How does Ethereum do their?
They have the Ethereum Foundation. Well, initially it was just like a group of people, but they didn't, and there was like an initial coin offering for the people that were like part of like funding the people to develop Ethereum and the developers themselves. And like so now I think it's really cool. There's like that there's like ETH Global that like helps fund like all these people to get into like this like the environment, to like go to hackathons and like learn how to use Ethereum and develop on it. So it's
Well,
like
where does that money come from? I don't understand.
it came from original some like initial like some early adopters and some of the original like
The early
developers.
adopters pay? Where does the money come from?
It came there's an initial ICO for just from people that like paid developers like to develop Ethereum. Then the developers themselves, there's like an initial ICO and then just early adopters. And so people that want to, similar to like what BitMEX does, people that want to have a thriving community will take their initial ETH that they got that has grown in a lot of value, and then will use it to fund projects and stuff.
I see.
Yeah, coming to like mechanism design, they're incentivized to do so
Mhm.
because they have a lot of Ethereum, and if like the Ethereum
Yeah.
platform
Yeah.
grows,
Yeah.
then and more people develop on it, then everyone's kind of locked in, and more value goes into Ethereum, and then their Ethereum
Get it.
value.
It's not necessarily altruistic, but
But it's,
But
yeah,
yeah.
I think
We're
it's still
not
an
talking
interesting
about
question.
Yeah,
alpha,
yeah,
we're talking about
Yeah.
ways of funding, right?
yeah, no,
Some
and
of
that's
which
like
can be-
it benefits them
Yeah,
for
yeah.
people.
So,
But
go ahead.
Oh, but I do think it's still an interesting question of like, how is this community organized?
Mhm.
Like, is there a pool of a bunch of Ethereum billionaires that got together and they're like, it'd be really good for all of us if we put some money into this, the same way like all the Got Milk funders.
Yeah,
you
well,
know?
the Ethereum Foundation is like really big, right? On like they're funding like projects on like the new ETH 2.0.
You have DAOs as well, don't you?
You do have some. What's an example of the DAOs?
The Moloch DAO.
Moloch DAO. Though that's relatively small compared to the rest of the things, but yeah, you do have DAOs that are funding. What were you gonna say, Talila?
I wasn't, I was just nodding because I know Safine's working on a project trying to get funded by Moloch.
Oh, nice. Oh, good luck. Good luck.
We'll see.
Cool. Hey, Moloch DAO, please
I'll
fund
let
some.
you know.
So Ethereum, so I would think of this in a couple ways. The ICO as a thing is this weird thing where I like the analogy that this Bloomberg writer Matt Levine gives, which is it's like you're selling airline points in order to create the airplane. Where you're like, hey everybody, airplanes are going to be cool, and when they exist, you can get on them with these airplane points. And so get your money into airplane points, and then once the airplane is ready, you can get on it. That's essentially how ICOs work, and that's kind of a hating version of them, but it's also true. It's like, hey, we want to create this, jumpstart this new network. fund the new network, and then what you'll get in return is a digital asset that will be able to be used on that network. And so with Ethereum, yeah, there's an initial ICO, and that ICO raised $14 million at the time, which is now between like $200 and $600 million. And that crew, Ethereum Foundation, has a bunch of that money, and they fund it. And then, so it's kind of, I guess, one way to think of it is it's kind of like the Zcash model, but instead of having the rewards happen over time, they all happen at the beginning. That's like the ICO piece. The Ethereum versus Bitcoin piece is a very similar billionaire model to some extent. We have someone like Joe Lubin, who's definitely a billionaire, and he, he both is moderately altruistic and is moderately, and it's definitely incentivized to increase the price of all his ETH holdings. So there's that model
So
too.
the term for that is crowdfunding, right? They got crowdfunding to.
You could call ICO, I would think of ICOs as a variant on crowdfunding.
Yeah, how is it different from the Kickstarter?
That's crowdfunding.
I think the key difference in my mind between ICOs and something like Kickstarter are ICOs are permissionless in the sense that you are, anybody can be like, ooh, I want to get in on this thing here. Anybody in the world can just tap into the Ethereum network and send money to the smart contract and get in return, send ETH and then get some of these new tokens in return. So that's one key difference, and the other key difference is what you're getting. So on something like Kickstarter, you send money to the project, and then eventually they probably like send you some kind of physical good, versus these things where you send money to the project, and the thing you get in return is essentially useless at the beginning, but can long-term be used to perform actions in this network, or to use that
It's
network.
like a commodity.
Yeah, I think it's much closer to a commodity. Oh, I keep thinking you're
And
raising your
also-
hand, sorry.
And also there's a quality review that Kickstarter does before the thing goes on the platform. That's a trusted third party giving the.
Sorry, two small anecdotes. And I think like the risk is a lot higher when you do an ICO because you don't actually know if it's gonna be successful and your airline points are gonna
The
count.
Kickstarter's similar, I think.
I think you get your money back.
Do you?
No.
No? Okay.
No, you don't.
Kickstarter?
No, because they use that to develop stuff. They use that to like pay themselves to like develop whatever product they're gonna use, and if nothing happens, then you just like
Oh, I'm sorry. I didn't realize that.
yeah.
No, but it is
But-
still
You get
higher
your money
risk
if they don't reach the
because.
Yeah.
There's a
Yeah,
minimum.
yeah,
If
yeah,
they
yeah,
don't
yeah.
reach that,
Yeah.
then they refund everyone's money.
Oh,
Yeah,
yeah,
threshold,
okay.
It's on you, like you just have to trust that they
Yeah.
send you something.
Yeah.
I mean, there's some kind
Yeah.
of, some weird recourse if they never send you the item, but basically lost the money.
What was your second point? Yeah.
Last week, I said how a lot of the exchanges now they're like IEOs,
Yeah.
and how a lot of the exchanges are inflating their market caps. And what my friend was explaining to me is it's not actually for the users. It's not like for people like him that are trading on the exchanges. That's not who they're inflating for. They're inflating for the coins that are going to possibly be added to the exchange because the coin developers actually pay a huge amount of money to the exchanges just to be listed there so that they have an opportunity for their IEO to be paid off.
Uh-huh. Right.
Sorry, I felt like that was
Yeah,
relevant
yeah,
to
yeah.
this
Yeah.
and
Are we talking about innovation in business models here? Are we saying, so open source software is basically funded by, well, people are not really getting paid, and then there is like a non-profit, where you can go out and raise money, and then the innovation model is also, you can then go crowdfunding instead of big funders, but then there's this very interesting model of, if you, in the ICO, then you have an incentive to actually pay some of your tokens to manage it, right, to raise the value. So we really have two, is that right? Am I understanding it right?
Yeah.
We only have two funding models, right? One is the non-profit, the old non-profit model, only it's now crowdfunding, so it's a lot of small donors instead of big donors. That's not, okay, that's innovation also, fine. But then it's that model of, and we don't have any other.
Are you talking about specifically for
models.
blockchain projects and
What I'm
funding
trying
or- yeah.
to understand is, are we seeing an innovation in business models or in let's call it funding models over time with the various, or is it all the same?
And what my claim would be is that I think that the innovation in blockchain funding models for open source compared to original open source models, that is your question essentially, yeah, is A, that you have, it's the ICO piece, and all the weird incentives that are baked into that of like, oh, you get new people into the network and then they want to make the network big too, so then they like, there's the ICO piece, and that's connected to this weird idea of, if you think about all these protocols, and you think about something like TCP/IP, you don't have to pay TCP/IP to use the API for it, but you can think of these blockchain protocols as needing to pay to use the API. That's what the little token does when you have ETH as gas. You're saying, I'm going to spend a little bit of gas in order to access this API for a little bit. So like the paying for APIs is very connected to ICOs. And I guess that the other piece here is just like programmatic creation of, like, if you're thinking about funding these things, like something like Zcash is not an ICO, but it's saying, hey, we're going to print money over time on this specific schedule, and we will use that to fund the network. So that's, and I think there is also innovation, something like Tezos, where again, all these things are just like, when do we print the money and how? And it's like, do you print the money all at the beginning and like randomly get people into it? Do you like print a bunch of money beforehand and then like promise to make the thing? Do you print money over time in the network and like give it to the people to keep making sure the money printing machine is going well? Do you print Tezos as the inflation funding model where you say, hey, do I, when new people, anybody in the network, not just the founders team, but anybody in the network can say, hey, I have this cool new idea, and if everybody agrees it's a cool new idea, you print new money and give it to them, devaluing everybody else's money, but printing new money. So it's like printing new money per pull request is the way you think about that one. So that's how, when do you print money and how?
In
I guess.
Grin, you beg for money, and then
exactly.
and then rant about not getting enough.
Grin, exactly.
Why does the government allow you to print money?
Mostly the government allowed somebody like Bitcoin to print money because they, as far as I understand, it was very difficult to stop it at the beginning, and it was also no one gave a shit.
Small.
Yeah, exactly.
Small.
It's very new.
And
Somehow,
now,
like in the future, it's already really big, so they will never stop it anymore, or there might be chance of
I have a perspective on that. So, Bitcoin is money for people who are willing to exchange it for money, fiat, right? So, I mean, the government, I don't know how it is. Does US agree that Bitcoin is a currency or not?
No,
That's
that's
the whole-
precisely the point. The regulatory authorities don't necessarily see it as money.
It's
So
the
they can't regulate it as money.
At a certain point, when they see it, and so that they might take action.
But
Well,
you know,
right, so
you know
when the-
Denise, who's in this class, who comes here, she's a regulator. She's a banking
Well,
regulator in
Like in
this.
China,
So when-
they ban.
when
And
Facebook-
she's trying, in this class, she's trying to figure out, well, what is the right regulatory approach to, so that's where we're at.
When Facebook came out with like Libra, and then like they went to like to Congress, to, like where they got grilled by Congress. That's exactly one of the things that a bunch of congressmen were asking them, which is like, why is Facebook allowed to print money when printing money is a state thing? You know, like that's how we collect taxes. That's how we control a lot of stuff. And so they don't like the idea of third parties that are not states.
So you would never know
Nation
what's
states
what
printing
happened.
Basically, basically, governments are losing market share on printing currency.
let me actually show you guys one cool thing on that, which I think is really cool, which is fiat market.
Did you read the Potts book that he sent out? Because it's very long, but he also has a paper, a chapter in there. They have a chapter in there where they say, you know, it's equity. It's a mix of debt and equity, and that's how we should think about these coins. They're not money. So.
Well, then
But that's
the
also
fiat is also
under
equity.
regulation.
IOU, it's an IOU, right?
Yeah, but is it equity?
But that and equity is also under regulation.
Money is an
right?
equity, right?
Yeah, but how would you stop people from mining Bitcoin?
Not money, but like you can stop the exchange to fiat money.
Yeah,
Yeah.
But
you can keep
That's
track
not
of
true.
like all the addresses that have stuff, and
Yeah,
Just
you
like-
could. I mean,
Yeah, also India.
I guess
I
you could
guess.
try.
So it'd be more difficult with like something like Zcash if you can like anonymize like your transactions to people. But like I mean, I shared that link on how like they caught a bunch of like pedophiles that were using Bitcoin thinking it was completely anonymous,
Yeah.
including someone that worked in like I think the State Department. So it's just like
Two people that work in the State Department. Yeah. I have a quote for.
Yeah. Please go.
Or two, well, I guess three things. One is, all of this is the question of what should this cryptocurrency stuff be viewed as? Money versus equity versus securities versus, a commodity or whatever. It's kind of all of the above.
Yeah.
The other question is, when you think about like it battling versus nation states, this is just a nice fiat market cap thing where it's like, if you've been to coinmarketcap.com, it shows different cryptocurrencies, like how much money of it there is in the world and like what the price per each one is and stuff. And this is just like that, but for nation state money. And I think it's just a cool, just seeing this for me was a very cool thing. Like here's Bitcoin. And it's just like, it's on the graph. It's like there's a little bit more Bitcoin than there are like Pakistani dollars or whatever.
Wow.
And there's a little bit less Bitcoin than there is of, like Egyptian
Danish
currency or whatever.
Colombian peso just beat it out.
Yeah, exactly. And so there's a market for this, countries no likey is what I'm saying.
And some people argue that like money that was not printed out by nation states was a thing beforehand, right? Like, and we talked about this at the very beginning of the class, where like other like banks used to print money, like even within the United States, banks print money. So it's like the current state of affairs is that only the government prints money, and the government really likes that, and it'd be difficult for the government to not like that or like to get away from that.
Going to another philosophical level, the whole idea of money was raised to avoid the friction for butter, right? So it's just a representation of value. So even Bitcoin or anything, monopoly money, if you agree to give me your ledger for monopoly money, that becomes money. So it's just a way to represent value.
Sure, but now like nation states have a lot of power and control from that, so it's difficult to like remove, just like to abstract that away.
So if someone like Facebook comes up and says, let's call this money, and people agree.
But there is the legal tender, right? So the government is saying you have to take US dollars if you're a stall, for example. It is legal tender. They could also say you have to accept Bitcoin, but they're not.
And one final note on that, I think before we switch on to income inequality for a second, is there's the legal tender piece. There's like telling stores you have to accept things as legal tender, and then also requiring taxes to be paid in a certain tender is super powerful. Like U.S. government's like $20 trillion or whatever per year that is paid in taxes, and so that being like that's essentially a sucking motion of like send me all of your seriously, or that's the way we think. We're just this big vacuum that says only you can pay in this.
That's what Facebook is after.
It's like who you would want, but the interesting thing is Bermuda. Just recently, they now allow people to pay their taxes in a stable coin, this USDC stable coin.
Really?
Yeah, it was the first country that did it yesterday. Bermuda. Yeah. So that would be a part of this battle. So in any case, that's how funding public goods is difficult, but blockchain projects do it in this way, meaning by printing money at certain times to fund the open source projects. Another thing I do want to chat about with this, just because we're here at MIT and we have all the, the Epstein and Joey stuff, is that there's, knowledge is a public good. Why is knowledge a public good? Non-rivalrous, non-excludable. If I know that 2 + 2 = 4, it's very difficult for me to stop you from also thinking that and to exclude you from using that in whatever way you're going to use that. And so that's why knowledge traditionally has been done in this public good way, where it's like we're going to fund a thing and then that thing will go to the world.
What about knowledge? You mean does any information come with knowledge?
Good question. I think that
like my privacy, some of the information.
Yeah, I think that in general, I personally do I think it's mostly correct to think of information also as a public good, because it is something that, whether from an internet perspective, whether it's just like little bits that you have, those bits of information, it's very difficult for you to exclude them, and it's very difficult that like they're not that non-rivalrous and that you can create infinity bits all for free. It's also true for wavelength, like radio or television, where it's like, again, you can essentially create it for free. And it's also true for stuff like the other information I was going to say, I guess any kind of language-based thing. So I would say,
Are patents not knowledge?
Yeah.
that's a good question. So patenting is an example of why of us trying to like stop this to some extent, where it says, hey, we have this knowledge that in theory everybody could use. In theory it's non-excludable, non-arrivalized. But what we're going to do is we're going to try to create a incentive mechanism such.
No, the knowledge in the patent, the point of a patent is to make the knowledge public.
Yeah.
You have, in order to get the patent, you have to go to the patent office and describe, and they want you to write as many details in so that somebody else skilled in the art can understand what it is you're doing. It's precisely to make it public. But then you get an exclusive license to use it, but it's the idea is absolutely to make it a public.
And then you
good.
make it a club good then, because you excluded people.
But after 20 years, it will be.
Yeah.
No, the knowledge is public, but you can't.
In the patent.
In the
Yeah.
patent, right? Because it gets published. You can go in and read anything that's in the patent, but you can't go in and read the production of research at universities anymore, because now you have to go to Elsevier and pay to get it in, right? But 20 years ago, anything that people did at a university was a public good because it was out there published. Anyone could get it. Now you can't. So knowledge used to be a public good, but it is now.
Cryptoeconomics Journal is open source.
And then there's classified knowledge also.
Well, I guess it opens up the question, is knowledge useful as just pure knowledge, or is it only useful when you can execute on it?
Total.
Yeah, like a private information.
Yeah.
Like I can know how a nuclear power plant is made, but like I'm not gonna make a nuclear power plant.
Thank you for that.
Yeah, exactly. So I think that the macro question here, and whether I think that was all interesting in the differentiation between information and knowledge as well. And I think that when we think about universities funding research, this is like how do universities fund research?
From the state and from philanthropic entities.
Yeah, states, philanthropic entities,
Consortium
Tuition.
companies that want IT.
consortium companies that want to
Sponsored research.
sponsored research. Yeah, boys and boys that.
They don't give a IT.
Epstein.
Yeah.
Epstein, yeah, exactly, yeah. Philanthropy or like billionaire
Whitewashing.
philanthropy.
Yeah.
Yeah, so I think all those things, the weird thing with funding any kind of public good, whether it's something like knowledge or research that you're trying to do, or some of these other ones, is that the money kind of needs to come from somewhere, whether you print it in the system like a Tezos or a Zcash or an Ethereum kind of thing, or whether you are bringing it from one of these outside sources, whether it is the nation state, or whether it is companies or whatever, whoever it is, you kind of have to bring it, or those super rich people, you kind of have to bring in that money from somewhere else. Often because the thing that you're creating might not have the business model built into it. So the question, I guess, is for something like this, I mean, I don't think we need to go too deep down this rabbit hole, but there's this question of, I think I have it on this next page, which is, so the DCI asks this question a bunch. Which is, who should we accept money from? And there are all kinds of people that want to work with us all the time. And this is true for DCI, but it's also true, obviously, for the Media Lab and MIT and any kind of thing with a good brand or has good researchers or whatever. You have to really ask this question of who should the DCI accept money from. And there's a bunch of different options for us here. There's like things like exchanges, that we can accept money from, but a lot of those exchanges are like not regulated, like they exist in, like the Bermuda or and they have all these very sketchy practices. What were you gonna say?
Oh, I just understood that. So you're not thinking about Epstein, but you're now thinking about the various crypto monies. Should you accept crypto donations in order to run the DCI?
There's a question of the crypto donations themselves, and that gets into questions of like anonymity and non-anonymity and stuff like that, which is a whole interesting piece. But the more general question I was asking here is, what kinds of companies, like would it be okay for the DCI to accept money from Facebook? Would it be okay for the DCI to accept money from Binance, like the sketchiest crypto
Bank
exchange?
of America.
Would it be Bank of America? What about a billionaire that got into Bitcoin really early or whatever? What about someone who did an ICO
Yeah.
that was like a pretty scammy ICO, but like they're kind of doing good work or whatever? What do people think about this?
I think it's very subjective. For me, in an ideal world, as long as the research is not influenced by that sponsor from anyone.
That's a key piece.
But what about the problem of whitewashing? For example, the Koch brothers have donated a lot of money to MIT, and now they get to put their names really largely on a cancer research institution,
On
and
the kindergarten.
on the kindergarten, and maybe it allows, and a lot of art institutions like
Yeah.
the Met is well funded by the Koch brothers, but they also fund a lot of climate denial research and a lot of think tanks that are doing huge damage to the world, and maybe we can.
What's the loss of whitewashing? What's
The loss of whitewashing is now, instead of it being really obvious to the general public that what the Koch brothers are doing is bad, it's a bit more nuanced, and it's a bit less obvious that they're putting their money in dark places because they're also putting their money in places that
Shine a good light on them.
Yeah, totally.
Lucas, what were you gonna say then, Joe?
I was just gonna say, as long as it's not contingent on anything, including the fact that like they can't, the MIT will not acknowledge the fact that they donated the money, or like MIT will not give them anyone as like we don't know who gave us the money. I mean, like take the money, do your background check, make sure I guess it's not from terrorists or something. I don't know. But other than that, be like, David Koch says he gave us money. We don't know. We can't confirm or deny that.
But would David Koch donate that money if like he didn't get to put his name on the shiny new building?
Exactly. that eliminates the sort
Yeah.
of, you know.
Yeah, but Jeffrey Epstein will, right? That's the thing. He will donate anonymously because
No, because it wasn't anonymous. It wasn't anonymous. It wasn't truly anonymous, and that's why it was problematic. Like, people were speaking about his name within. If it had been truly anonymous, then no one would have known, and that would have been a different situation. But there were some strings attached because he wasn't anonymous, and that's what makes it patronage, and that's what made it dangerous.
there were strings attached.
But you don't really know, right? Because it
Oh.
wasn't anonymous.
And that, or
I
Joe?
think transparency is a really interesting issue here. It's like it seems like you have to go to one end or the other. Either you I mean I think I'm not sure it's really feasible to say like you never know, no one would ever know, and you keep it completely dark. But so it seems like one answer is you make absolutely everything transparent, and then people have to decide are you okay with that, or are people okay with it?
When you say
I think it's
people, you
true
mean
because
people say, for example, Reese would
our
have to say
stakeholders are,
that this money is coming from there. I don't want to work with this money. Is that what you mean?
Do you want to go to a school that, do you want to be in an institution that historically has been 95% funded by the DoD?
Yeah.
When I was just an undergrad, that was like, I didn't realize that, and then we kind of like actually discovered like, oh my god, like defense funds everything here. It's like, like, okay, well, am I okay with that? I was, but a lot of people weren't, right? So, I don't think there's any pat answer. I think that's the problem, because you look at the amount of money. Either you accept that an institution like this should have just less money in it, less funding for it, or you end up butting up against these difficult questions.
So,
There's a dial, in other words, right? I think
so your point is less about who should we accept money from, but to who should make the decision. Like if it's transparent enough, can be more democratic process.
I'm not sure.
If everyone agrees that.
Personally, I'm not sure democracy comes into it that much. I think you delegate the administration of that decision to the administration, and then you have to sort of decide whether you feel they're doing a good job and whether you want to be part of it or not.
I don't understand your argument, Joe. What are you saying? What are you saying?
I'm not arguing.
The MIT, Raphael Reif and people around him should decide which money to take, and then it should be transparent. Is that what you're saying?
I think there should be a lot more transparency. Maybe there should be full transparency. Yeah, I think that is what I'm saying.
But it should be delegated to somebody like the
I
administration.
think you have to. I think it's not practical
Alright.
in any other way to
Yeah.
run an organization.
Okay.
Yeah, I thought,
Like we delegate our government to our politicians. Sorry.
but I thought you were doing a really good job saying more than that. Like there's this, maybe on opposite sides of this spectrum are where we're safest. Either full transparency or full anonymity, because with full anonymity then there's no like strings attached.
Yeah.
But what full transparency does, if it doesn't necessarily make this a democratic process, at least it allows an undergrad going into MIT to make a more informed decision about the institution that they are then going to be attaching their own identity to.
Yeah.
And an interesting point that Sandy Pentland had raised in the conversation was one safe way that sometimes institutions accept money from individuals is as bequests once they die, because then there are no strings attached, or fewer. Maybe you have maybe you're whitewashing someone's name, but
Yeah.
it's just a different scenario.
Sacklers and that kind of stuff. But yeah, that's an interesting idea.
So I think so this is a very and let me ask and let me do a pro con thing for a second, but I think a lot of what you're saying, a lot of what everybody's saying is true, which is I think in general it's best to be bimodal with respect to anonymity and transparency. And what I mean by that is like being super transparent is probably good, or being super anonymous and like actually being like, yeah, we just got this money through our Zcash shielded address. You really have no idea who it is. Like people are trying to email us and saying like this is us or whatever, but like I guess those two sides of the spectrum are really good. The thing that is dangerous when you're like, oh, this is anonymous from an outside of the world perspective, but not anonymous from an inside the world perspective, something like the Epstein situation. I think that the questions of influence and research is a huge thing here of like, and this is tough though, because again, the main goal for why people, both of these, influencing research and whitewashing, the main goal for a lot of people when they fund stuff, like whether it's MIT or whether it's open source software or whatever it is to influence the research. It is to say, no, we want to get value out of this relationship. Or, hey, we want to be whitewashed. We want to get some kind of brand value here. And so those things are difficult as a conversation there.
I think it's even more complicated because if we just talk about influence, then it's as if, there's no value from the perspective of the university to have contact with the outside world. This is MIT, right? We understand that in order to do stuff, you have to interact with the world out there. And so it's very often of great benefit for us here to understand what's going out in the real corporate world. We actually want to have contact with them. So it's not just about influence, it's about us also getting the information that we need from the outside.
Yeah, I think that's a good point. And a similar point could be made about brand as well, where it's like, oh, we want to be associated with, Give Directly or some kind of organization that's doing a lot of good in the world or whatever, yeah. So I think I want to ask everybody just a funny quiz that I want to ask people is I'll name some like people / companies, and then mostly in the crypto space you'll say like thumbs up, like definitely take money from that person, like thumbs down, like no, don't take money from that person or thing.
Before you do that,
yeah,
that's all everyone's perspective in this room.
Oh, this is just like a random perspective. Yeah, exactly.
And none of that money is
Turn the
tied
camera
to
off.
anything. It's tied to you have to do this or this sort of research.
That's a good question. I think that money, I would assume that money is loosely tied to having a relationship with that entity. This money is not just being put through a Zcash shielded address. This is like taking money from some entity that and you had some Skype calls with them or whatever, and then they will wire you some or Bitcoin you some money or
But
whatever.
you don't have to allocate that money the way they would like you to allocate that money.
You're not allocating it the way that they would like, but you are likely being affected by your relationship with that group.
Okay.
Yeah. So the first one that I would ask is someone like, let's call it like Satoshi Nakamoto. Like, what do you think? If we want to take money from him?
Satoshi, yeah.
Interesting.
It's like a reputation pool.
Yeah, reputation.
And have transparency also, right?
What about another Bitcoin billionaire like Brock Pierce? Let's go Brock Pierce.
I don't know.
Who is he?
He's another billionaire, another like Bitcoin billionaire that has a lot worse brand. Essentially, what about someone who's done a big ICO, like let's call it like, whether it's Telegram or Filecoin or something like that. Someone who's done an ICO of like $250 million or more. Do you think that we should take money from a group
Is
like
that
that?
ICO money?
You can, for all intents and purposes, yes, it's ICO money that we're taking. and we would be typing.
I'm with it.
Yeah, okay. What about, a company like, so there's Binance, which is the exchange that has the most exchange volume. It's super successful, and they are also, they're not very well regulated. They do not have the NYC BIT license. They also don't have whatever the main other regulatory thing that almost all exchanges have. They exist in like the weird, I think they are domiciled probably with many places around the globe, but like Bermuda or one of those small islands. Should we take money from a place like Binance, like an exchange like Binance?
You said earlier it was sketchy. Like, I'm curious to hear your thoughts. As someone who is on Binance, I'm just like.
So Binance is sketchy in the sense that they, the reason why they got big is because they did not do KYC AML. So during the 2017 bubble, other people were trying to like get on the Coinbase and like get stuff through Coinbase, and Binance was just like, whatever, anybody can buy cryptocurrency over here, and they were just like, come on in, everybody. And then they also did some interesting, they were one of the main creators of the bubble to some extent, and that they were all of these exchange listings. They're like, hey everybody, print new money, and when you print new money, that money can go up in value if you put it on our exchange website, and if you do, you can pay $100,000 or $500,000 to get it on our exchange website. So that's moderately sketchy, and then the final sketchy thing might be something like their token BNB, and their token BNB is essentially exchange listings, but kind of democratized in this weird way, but it's a system where they can create, people can use this BNB token to exchange on their platform and things like that.
Have they been hacked?
I think most cryptocurrency exchanges have been hacked. Binance, I believe, has been hacked, but that is not, I think that they have been hacked a bit, but not more or less than the other exchange.
What do you think is wrong with them having an exchange token?
There's, I think that the exchange token is a part, or an argument could be made that their exchange token is part of a speculation system that, just like the question of like, should people be allowed to, so I think that there's a question of, do you think people should be allowed to pay money to get onto their site to be listed? That's an open question. And then there's another question, which is, do you think people should be able to pay them money to get their BNB token and then pay less? The BNB token essentially is a discount to get, I don't know all the things that their token does, but one of the things it does is gets people wanted so that they can then be listed on Binance. So I don't know the full details of their token, but the sketchiness of the token is that it is connected to this whole speculative environment of getting people to participate in the gambling game that is cryptocurrency technology.
Okay.
Yeah.
I
So-
just understood it as like a way to clean up dust.
That's what you thought BNB was? That might be true. I should look into make sure
What's
what I
dust?
It's like if you have a transaction or like something left over from a transaction that's just like such a small amount that just it's better than just
Oh,
like
I see.
say it's,
I see,
it's
I
dust
see.
and we're not gonna
Yeah.
give you
Yeah.
your funds for that weird amount, and then you can like then click a button to like convert all your dust into their
Yeah,
exchange
yeah.
token.
I think that is probably one of the uses of BNB. That would not surprise me. In any case, so would we accept money from Binance?
I'm gonna go yes.
Fun. Yeah, so there's no right answer to all these things. You can look at the, or actually let me ask one final one. Should we accept money from Facebook?
I think Facebook is more than we can buy it.
Yes.
Would you send money from Zabo?
What's that?
Like Nick
Szabo? Oh, Nick Szabo. I don't know. So the funny thing with Facebook, and the reason why I asked that is because someone like people look back at things like the Sackler family or people that have done opioids or cigarettes or things like that, and you're like, oh, those people bad. They made these big companies or like oil companies or whatever. And then you're like, oh, but what about something like Facebook? And they're essentially just extracting and mining the new oil of attention and being part of this surveillance capitalism economy where they're just addicting people and turning people into blue and red tribes and all that kind of stuff. So like, I think it could be an argument, or I wouldn't be surprised if in 20 years people were like, oh God, you're accepting money from Facebook, you know? And even today, like none of the big tech ethics places, none of them would accept money from Facebook. So this is to say, there's obviously no right answers
What
to
about
this.
Koch brothers?
Koch brothers don't offer us money.
So you're saying everyone we just discussed has offered DCI money?
That is not. I have no comment. I have no comment. But in general, there's a question.
Very interesting. And the camera's on.
Exactly.
The Koch brothers will only care if you have like it's working on an oil coin or something like that, then they'll care.
Yeah, exactly. So, and let me say one final piece on this, which is weird, which is this fungibility of money piece, which is this macro question of like, okay, if you think something like a Bitcoin is very fungible, is pretty darn fungible, which is the like one Bitcoin over here is pretty much the same as this other Bitcoin over there. In fact, new Bitcoins that are mined are worth a little bit more, and super old Bitcoins are worth a little bit more. They have like collector's value, and the new ones are like super clean. And, like some of the ones in between that have like been through bad like dark web stuff are like worth less. But in general, Bitcoins are fungible with each other. This is a question as well where you're just thinking like, okay, if we're going to be taking money in as a system, like how should we think about like money from one thing versus the other thing, or like if someone like Epstein then gave the money to like something like the Gates stuff is an example of this, where like Epstein told Gates or whatever, hey Gates, you should give these people money. Whose money is that? And that, I think that is another open question with all this stuff, is how the fungibility of money and works. So that is funding public goods. It is difficult. Let me see, so we have about 9 minutes left. I guess I want to say one final piece here, which is, talking about, so wealth inequality. I think the biggest question that I would want to discuss with all of you now is, there's a question of like, and I think we had this discussion over the summer, which was like, is wealth inequality bad? And there's lots of arguments one way or the other way for this. I personally believe it is generally bad, and you can either look from like a hyper-scientific perspective and map wealth inequality to like social instability or things like that. You can also just map wealth inequality to like power imbalances, and like having more or less power imbalances is probably bad. Like more power imbalance is bad. Or you can map it to something like abundance and be like, oh, for someone like me, I have enough money, so I self-tax myself, like 10% of my income and give it back to people. So like having wealth inequality is if you have lots of wealth inequality, it's a sign that not very many people are like self-taxing or whatever. In any case, so if we assume that wealth inequality is bad, this question I think comes up a lot in the cryptocurrency world, which is you have kind of a hyper-libertarian perspective here, which is like, hey, the equality of opportunity is really what matters. We had something like Bitcoin was perfectly fair. It was an equal opportunity. Anybody could get in on it. And you could get in on that thing. And like, oh, sure, the outcome doesn't look great, as in there's a lot of people with a lot of money and a lot of people with not very much money. But the argument from the libertarian folks would be, we want equality of opportunity, and we don't really care about equality of outcome. And this is also essentially the same classic debate that happens throughout time with philosophical things and other things of like liberty versus equality, where you say, hey, if you want something to be super free, then it's hard to like contain that thing. And so if you want something to be equal, these two things can be in like natural tension with each other, is making something super free versus making something super equal. So what do people think about this, especially in the context of cryptocurrencies?
Well, I liked the second to last article that we had to read that talked about constrained visions versus unconstrained visions, and I think when I read it, I kind of viewed the wealth inequality stuff in like a different light, which is like thinking of like, like you can argue that there's still like a large inequality gap with like the new cryptocurrencies, and it's like not the kind of like the altruistic version that everyone views. It's a new way to like spread like funds around, but it's like if you view it from a constrained viewpoint, then you're just like, well, it'll be virtually impossible to really do that in a correct manner. So that's just kind of like how it is. But if you view it from like a unconstrained point of view, it means like, well, you're just like not imaginative enough, and like you haven't found the right solution, and there will be the right blockchain or cryptocurrency that will like solve this problem and distribute wealth equally.
Yeah, I agree.
I think it's just the balance is the key, right? And I believe, don't worry too much, the ecosystem will balance itself eventually. Like Imagine, I heard a story like on a planet, the whole planet belongs to one person, but the other person are living in a bubble because the private property issue. But it will never happen because people will fight. So eventually it will balance itself.
With a hard
Yeah.
fork to distribute everyone's wealth.
Like the rebalance can be catastrophic.
Yeah, exactly.
Yeah, in that scenario, the rebalance sounds like it would be catastrophic.
Yeah.
Evolution, not revolution.
Yeah.
But that's the worst case. But there's other mechanism which will keep the balance, but not only the extreme rebalance.
But when you look at these examples from history, doesn't it seem like often when the balance is very askew, it takes a war to change situations?
Yeah, so the key is how can we find a better rebalancing mechanism which is not catastrophic.
I think the problem with the equality of opportunity argument for certainly for Bitcoin, but almost for any investable asset, is that the percentage of people who actually have investable assets is actually quite small. So, and then you have this power law, right? So you have some people who can literally invest millions without feeling any pain whatsoever, and some people can only invest thousands and can't invest
Or
dollars,
hundreds,
right?
right,
So,
yeah.
so you have this, order of magnitude issue, and so I think that contributes or that creates a lot of wealth involved, right?
Yeah, I fully agree with that.
Yeah, I was gonna reiterate that. It's just like, no matter how perfect of a system you design, it's still tethered to things that exist in the quote unquote real world. And if you still have a lot of money here, you'll have money to invest in this new supposedly equal opportunity system. And also, a lot of Bitcoin was pre-mined. I think Ethereum as well. Like if you were an early investor in Ethereum, you got a lot of Ethereum before it was released.
Bitcoin was not pre-mined though.
Bitcoin was not pre-mined.
It was
No.
released to the world and the mining just started to happen.
The pre-mining was just like the people that
It was just
found it and were found it interesting and I'll start mining on my CPU because I can.
Or like Satoshi who mined, I think, a million Bitcoin. So he was essentially he was like, I'm gonna spend a bunch of electricity on this thing at the beginning to get it off the ground.
Just that maybe they're not separable, this equality of opportunity versus equality of outcome. Like maybe the current state of inequality of outcome makes the equality of opportunity infeasible, to your point that not everyone has the funds to make investment easy for them, or has the education or knowledge to know what is a good investment. And so
Yeah,
they're kind of being this cycle here of inequality that we can't remove ourselves from.
If you weren't into cypherpunk, when Bitcoin came out, how would you have known about it, right? So it's there's just that knowledge gap in itself is
Although it's interesting that's a particular case because there was a hell of a long time when Bitcoin was like $1.
No, yeah, that's true.
So obviously there's a difference in whether you had millions to sit around. You
Yeah.
had 5 million Bitcoins, but all of us could have made a lot of money.
Yeah, but then you come to when you used to be able to mine it on a CPU versus when then the hardware started becoming expensive for you to start mining with GPUs and ASICs. It's all these things slowly became just more expensive. Even if it was $1, it's still you required more resources now to start mining, and it just grew exponentially. Where now you have giant mining pools. And
Yeah,
stuff.
you cannot access.
Just to make sure I understand correctly, again, when you say equality, you mean everyone has equal share, and you don't mean an equilibrium where everyone's kind of satisfied with wherever they are, right? Because if you look at, for example, economy today, and there is example about one person owning the planet, in countries generally, okay, let's not generalize it, but I'm taking a hypothetical situation, a country A, 5% of the wealth is 95% of the wealth is concentrated to 5% of the people. So that's still an equilibrium that people are living with, and they're not fighting. So that's not equality, but that's still an equilibrium.
And in here, I see what you're saying, which is, and I think I'm talking about the equality piece, not the equilibrium piece. And the equilibrium piece, I think, gets at this reinforcing loop that a lot of us are talking about, which is when you have these systems where the people in power can continue to be in power, it's kind of an equilibrium to some extent, as long as that power doesn't happen that much, and then the people get angry and want to express exit or voice against that system, and then want to exit. So this is to say, I think that there's, we've got to get into rap mode, but I think that there's In general, I would say just be wary of, and I kind of wish Hash was here today because he's, I think, more on the equality, thinks that equality of opportunity was true within Bitcoin at the beginning. There's a lot of arguments to be made here, and it's also true, like, for a lot of us, like, probably some of us, whenever you first learned about the cryptocurrency or whatever, you probably could have bought it then if you were smarter or whatever. And so there is at least some truth to being like, hey, you see the opportunity and then you have a hard work ethic, or or you're smart or whatever, and you actually act on that opportunity. So there is at least some truth on the other perspective here. The macro piece with all of this is that wealth inequality and funding public goods are very connected, as we've seen with things like billionaire philanthropy or any of the big companies that just start to exist and they get a bunch of money and then eventually they need to fund the public goods. And so this balance between how to fund the public goods and then on the other side, like what the wealth inequality of the system looks like.